Very good afternoon to all. Welcome to Tally CA Connect. It's great to meet you all every Wednesday, 3 p.m. Today, once again, we are going to cover the financial statements for non-corporate entities, as this is a important ask and very relevant for this year's audit. So we are here to answer your queries, to take you through this Excel add-on provided by TallyPrime to support this new mandate by ICAI. And Allow me to introduce our today's expert, that is CA Kunal Soni. Kunal ji is a practicing chartered accountant and a tally evangelist. He has been into corporate advisory services for financial restructuring, be it import-export advisory on various incentive schemes of government. His main domain of work includes system implementation based on companies' requirements. He has taken over 100 corporate training sessions, and today he's going to take us through this new Excel add-on, which he himself has tried on for many of his clients. And let us see what are his opinions, what are the benefits he has to mention on this new Excel feature. So thank you, Kunalji, for taking out time from your very busy schedule. I'm sure this is audit season. So I'm very thankful to the audience here who are here to learn about this new feature. And thanks to you for taking out from your very busy schedule, I'm sure. So thank you so much. Without further delay, let's begin.
Okay. Thank you, Komalji, for the introduction, and thank you, Tally Solutions, for inviting as a speaker. So now, why this session and why this particular point of time? So as we all know that currently the audit season is going on. So mostly even for individuals, partnership firms. So you are supposed to do tax audit. So now the point is that Tally already has provided with one of the best solution, I would say, for the non-corporate entities. You might be aware that now for non-corporate entities too, it is mandatory that it should be reported in one particular proper format. Now, whether to do that manually, how the same could be integrated with the existing Tally. So today we are going to understand the same. I would just share with my screen. Hope the screen is visible.
Yeah, the PPT screen is visible.
Okay, so financial statements for non-corporate entities. Now, see, initially, I would like to just brief you that about what all guidance notes are there as on date, which have been provided by ICAI. And in case if you have any query or anything, you can even just ask in between also. So first thing, see, previously, as we all might be aware that in Companies Act, they have provided with Schedule 3. So for companies, it was specifically required that they need to prepare the financials in one particular proper format. And it was different for AS and Ind AS. So Schedule 3 has been going on since long. Now, then it came that for LLP also, there has been a guidance note whereby the financial for limited liability partnership firms need to be provided in one specific formats. But discussing about the sole proprietorships or partnerships or HUF or trust or AOP, there has been no specific formats. So initially in 2022, there had been a technical guide for the same. Now, as we all might be aware of the fact that guidance notes are generally recommendatory in nature, those are not mandated. So in 2022, there was a technical guide for the same. We were not following because the same has not been mandated. Post that in August 23, it has came that with effect from 1st April 24, it is mandatory that the non-corporate entities also prepare the financials in one particular specific formats. So now it is mandatory. I hope you all would have gone through that guidance note also and the FAQs and all those things. Now, generally the guidance notes are recommendatory in nature, but now with effect from 1st April, it is mandatory. Now, what happens or what are the consequences? Let's say you being an auditor, if you are not following those things. Now, as you all might be aware that ICAI provides all these guidance notes and all those things. So there has even been question, what power does ICAI have with respect to model financials for non-corporate entities? So see, I would say that ICI is the governing body who provides for all these things, that how and in what manner the financials should be presented. Now, first point is, you being an auditor, let's say if you are not following the same, then what are the consequences of the same? You either need to provide with a modified opinion, that let's say for in this particular financials, the particular guidance note, this clause or this particular points have not been followed with, so you need to decide on the fact that on what particular points you need to modify your opinion. So now it is even mandatory that each of the even sole proprietor entities or the partnership firms, whether they have followed this particular guidance note or not, and if they have not followed, then it is your responsibility being an auditor, that you are supposed to express an opinion, whether to give a clean report or modified opinion or what. Now, coming to what we are going to discuss, the objective and the scope of the guidance note, traditional reports and versus ICI non-corporate entities formats, then the scope of financial statements for non-corporate entities, the Excel tool that Tally has already provided. Now, see, it is one of the really good tool, because see, most of the cases you might be aware of the fact that the SMEs or the MSME, they generally have that all the accounting data in Tally itself. Majority of class is such who are using Tally. So this is one of the really useful tool that Tally has provided, that directly from that particular Tally itself, the financial statements and all those things could be prepared in Excel. And it is very well compliant with the guidance note that has been provided by ICI. Then the non-corporate entity Excel add-on tool, and how to activate add-on, how to use that particular Excel, what in case there is change in data, and all those things we are going to discuss on the same. So as we discussed previously, that in June 2022, ICAI has issued the technical guide on financial statements for non-corporate entities. Now, in August 23, they have issued a guidance note for the financial statements of non-corporate entities. So in 2020, it was not mandated. Means it was just something, a sort of recommendations and other things that could be provided from users, that what all things could be inculcated not. And based on the same, they have provided one technical guide. In August 23, there was a final guidance note, and which prescribed that with effect from 1st April 2024, it becomes effective, and it even supersedes the earlier technical guide that has been issued. And the basic purpose of this particular guidance note is the standardization of financial statements, so that for any particular class of user, if it is in one particular format, then user would be in a position to have an idea that what it exactly represents. So NCE, that is basically financials for non-corporate entities. So we are going to discuss that who are non-corporate entities to whom this is applicable. So first we would discuss on that those facts, and then we would initiate with how the same could be used in Tally. Now, see, who are not considered as non-corporate entities. So this is the first point. Now let's say any company. So for company, you might be aware of the fact that there is a specific schedule 3. In schedule 3, it has already been prescribed the formats in which company are supposed to report their financial statements. So for company, this particular thing is not applicable. Apart from that, there has been a separate guidance note for LLP also. So let's say if you are doing any sort of LLP audit or anything, then in that particular case, those LLP financial statements need to be prepared as per the guidance note issued for the LLP. Now, there is a separate guidance note that has been provided now for the non-corporate entities. Now, see, when you are doing audit of any particular entity, so what being an auditor, you are supposed to sign the financial statements, that and even audit that whether those who gives a true or fair view or not. So what ICAI has provided, that let's say if the financials are prepared in this particular format, then in that particular case only, if all the details are clearly mentioned, if it is as per the format that they have prescribed in the guidance note, then in that particular case only you would be in a position to certify that yes, this gives a true and fair view. So if the same is not in line with the same, then you need to give a thought that whether you want to modify the opinion or not. So for companies, there has been a separate financial statements format as per the Companies Act Schedule 3. LLP, there has been a separate guidance note. Now for non-corporate entities. So which all are non-corporate entities? So all these sole proprietorship firms, partnership firms, HUF, AOP, BOI, trust, all those are considered as non-corporate entities. And what non-corporate entities are supposed to report. Now, see, previously, if you might be aware of the fact, then for non-corporate entities, they have specifically provided in the accounting standard itself that there were certain levels that were defined: level 1, level 2, level 3, level 4. And based on the levels, there were certain exemptions in the accounting standards that has been provided. Now, see, any financial statements were required to be prepared based on the accounting standards itself. So that was there previously. And based on that level of entity, the exemptions were provided. Now, the format also has been provided for reporting those things. So being a CA, you need to attest those things and you need to certify that whether those are in line with the formats that has been provided. So currently for non-corporate entities, balance sheet, P&L are mandatory. Cash flow statements are mandatory to only certain class of entities. So there are the turnover and other criteria. Now previously it was level 1, level 2, level 3, level 4. Now it is MSME. So micro, small, medium, and large. So based on the same, which all accounting standards are applicable, that has been prescribed, and notes to accounts are mandatory for each of the same. Now, one more point to note here is, see, there has been a separate guidance note for the trust also. So ICAI has specifically provided that, let's say if you are preparing the guidance note for the trust, then there is a specific, if you are preparing financials for trust, then there is a specific guidance note for the same. So in that particular case, though it is a non-corporate entity, but you are not supposed to report based on this particular guidance note for non-corporate entities, because there is a specific guidance note for trust or the non-profit organizations, that is NPO. So in that particular case, you need to follow the guidance note for NPO, non-profit organization, and for all other entities, you are supposed to follow this particular guidance note. That, and what Tally has provided is, Tally has currently specifically highlighted to use this, that is for sole proprietorship firms, partnership firms, and HUF. So from Tally, you would be directly able to derive the financials of these three entities: proprietorship, partnership firm, and the HUFs. So hope for initially the applicability of the same has been cleared. To whom it is applicable, to whom you need to use for Schedule 3 for companies. For LLP, there is specific separate guidance note. For non-profit organization also, there is specific guidance note. Other than all these three entities, for any other entity, if it is there, then you need to follow this non-corporate entities. And what Tally has provided, it is specifically for sole proprietorships, partnership firms, and HF. Okay, and if you have any question with regards to applicability, you could even raise question and ask. Now, moving forward, the traditional formats versus the non-corporate entity formats that have been there. So traditional, we all know it has been a horizontal format whereby there were assets and liabilities, or liabilities and assets, that has been there. Now, what they have provided, that is something in line with the even the Schedule 3 format also, you could say, that is the vertical balance sheet and P&L. So ICAI has specifically prescribed that now it needs to be reported in this particular format. And the format also has been provided specifically in the guidance note. Now, see, what's the basic reason and logic behind the same? See, now, when it is in this particular format, along with the proper notes and all those things, it gives a detailed understanding to the users of the financial statements. So let's say for any of the entity, even if let's say we say sole proprietorship or something else, then if let's say there are any stakeholders, like let's say a bank who had provided borrowings to the entity, or any other person who would have lent his money to the entity, then in that particular case, they would be in a position to evaluate the financials properly based on the based on proper notes to accounts and proper disclosures of the same. So the basic purpose for the same is the standardization of financial statements, and it could be helpful to the stakeholders and users of the same. So similarly, there has been this old format. This is the default format of Tally. You all might be aware of the fact. And This is the format that has been prescribed by ICAI for the purpose of this non-corporate entities. Now, scope of financial statements for non-corporate entities and add-on Excel tool. So again, this now, as we discussed, that this particular tool, now coming to Tally, that this particular tool that Tally has provided, it is basically for sole proprietorships firms, partnership firms, and HUF. Now, what are the steps to use the add-on or the Excel tool? So financial statements, we need to export it from Tally, the data in XML. So what happens that, let's say initially what you need to do is there would be a Tally add-on plugin that would be directly available from the Tally website. We would go through the same, how the same could be activated. So once that plugin is activated, post that, what you are supposed to do is you need to export the XML from Tally. That export you need to import in the Excel tool that Tally has provided. And once you import the same, post that all the data of your trial balance and all those things would be available in that particular Excel tool. There would be an auto mapping of all the ledgers. Only certain ledgers that would be there, you would be required to map it manually. And apart from that, you can mention the notes and other thing, and you could print it directly from that particular Excel. And for that, they have even provided with a detailed understanding that these are the sheets that has been there in Excel. We will go through each of the same: readme, index, basic info, balance sheet, PNL. Now balance sheet, PNL would be prepared by itself. So what happens that once you import the XML in Excel, then your trial balance of current year, trial balance of previous year, your stock inventory details of current year and previous year, trade receivable and payable of current year and previous year, all these things would be imported directly in the Excel. Now see, why only these three things or four things: trial balance, stock, trade receivable, payable, and inventory. So see, basically, if you look at your financial statements, so trial balance provides a detail of all the ledgers of balance sheet and P&L items. So all the ledgers would be provided here. But let's say for the purpose of your cost of consumption, for that you need basically the opening stock, inward, outward, and closing. Accordingly, you would get the proper consumption figures. So for that, they have even provided that the entire inventory details that has been maintained in Tally, even that would be imported directly. So again, you are not supposed to do that manually. Right from that particular XML itself, it would be imported. So the XML that is generated consists of all these things. And why trade payable and receivable? So let's say there are certain reportings that whether your payables, which of your payables are MSME, which are not MSME. Then there is even an aging for the same, that which are within 6 months or which are exceeding 6 months. So what happens? So let's say if you have already maintained the same bill by bill in Tally, then in that particular case, it would be automatically fetched in this particular sheets, that is trade receivable and payable. So even you are not supposed to do the aging manually for the purpose of your financials. And notes and all those things, the formats are predefined. If you want to add any of the particular line items or anything, you can add it from your end. Okay, so to initiate with here, first thing is how to register. And before we initiate the practical aspect in Tally, I would like to even highlight some of the aspects for the technical for the guidance note that has been provided. Now, see this guidance note. Let's say if the sole proprietorship or the partnership is incorporated and it is the first year of that particular entity, then in that particular case, you are not supposed to provide any sort of comparative. However, let's say even before 1st April 2024, if the entity was in existence, then though this particular guidance note is applicable from 1st April 24, you are supposed to provide with the comparatives of the previous year also. Though the previous year financials would have not been prepared in this particular format, still for the current year, for the purpose of providing the comparative, you need to provide in this particular format itself. So let's say if there is an existing entity, be it be sole proprietorship firm or partnership or HUF, what you are supposed to do is you would be required to provide the details for 24-25 and even for 23-24. And you need to group and do mapping for both the financial years. And unless if there is a new entity, then in that particular case, the comparatives are not required. Now, how to register or enable the financial statements for non-corporate entity tools. So see, initially what they have provided is to to opt in for this particular, I would say, add-on, what you need to do is you need to go visit the Tally Solutions web portal. So let's just go through the same. So see, this is the website link for the same, the Tally Solutions web portal that's been there. Now see that they have provided here add-on to generate the financial statements for non-corporate as per the ICAI guidance note. So what you are supposed to do is you are supposed to provide your Tally serial number. Now see, one thing to note is here, it is not required that whether your TSS is renewed or not renewed. Now this particular things works basically on the concept that once you enter your serial number, it should be upgraded to TallyPrime 6.0 or above. So let's say if you have a valid license is required. Now post upgradation to 6.0, whether TSS is renewed or not renewed, that is irrelevant. Only point is you need to have upgraded to TallyPrime 6.0. Once you mention your serial number here, you can check the eligibility. Once you click on the same, the email would be sent to your registered email ID. And based on the same, I would have just done 1-2 days before only. So if I have the same, I would just provide you with the same. So you would even get the details of the finance. This mail would be there from Tally itself. The financial statements for non-corporate add-on has been successfully enabled on your Tally serial number. And what happens is, once the same has been done, the first thing that you are supposed to do is you need to update your Tally license. So how to update the license? Currently, it's just in educational mode. I would just reactivate Tally. Now, see, when you go here, so open Tally, go to F1 for help. Then there is an option for settings, license, manage license. There would be an option available here for update. Now you need to make sure that, see, once you have enabled this particular add-on, and in after that, you need to go to Tally license and you need to update the license. Only post that that particular add-on plugin would be enabled in the system. So it is mandatory that once you go, you update the license. Post that, what would happen? There is an option here, Tally plugins. Now, see, in this Tally plugins, there are currently two plugins that has been loaded. That is Tally Capital, and the other one is Financial Statements for NCs version 1.1. Now, currently, see, even there are two versions of the same. Initially, there was version 1.0, and now it is version 1.1 with some upgradations whereby if you click on the any of the items or note items in the balance sheet or P&L, you would be directly redirected to that particular notes. So this is the first basic step to enable this particular add-on. Hope the same has been clear to everyone. Okay, there is one question. So let's say if a sole proprietor has filed the last year ITR under 44 AD, then how to get the comparatives? Now, see, first and foremost thing is that if he has filed under 44 AD, there are two options that are available. See, one of the option would be that he would have already maintained his data, but for the purpose of filing ITR, he would have filed in 44 AD. And now 44 AD filing is just from the income tax perspective. But the books, the data management, that would have already been done in Tally itself. So that Tally you could select as a part of the comparative for previous year, and you could do the mapping for the same also if the books of accounts are maintained. And there is even a question that please repeat. So I would just provide a brief once again. So let's say this is initially you need to go to this particular web link on the Tally portal itself. For this add-on, you need to enter your serial number of Tally. You need to check the eligibility. Once you have checked the eligibility, the email would be sent to your registered email ID. And based on this registered email ID, you could just activate the same. So now let's say, see, they provided it with an OTP also. If you look into the same, that this is the OTP for activating this particular thing. So on the portal itself, they would ask for the OTP. Once you enter this particular OTP that has been received on your registered email ID, the add-on plugin would be activated in your license. And once the same has been activated, first thing you are supposed to do is you need to go to F1, you need to go to settings, license, manage license. You need to update your license so that that plugin is loaded in your Tally. And once you have done the same, what would happen? There is an option here for Tally plugins. This particular option would be available. The financial statements for non-corporate entities. So hope the same is clear. Okay, please share the link in the chat. Would share the same, and Komalji would further share you with the PPT and link and all those things also. And I would even do one thing. I would even share with the guidance note and the FAQs those have been issued by ICAI just for your reference. And there is one question: how you open Tally plugin in management? I didn't get it. See, where to enter OTP? It would be on the web portal itself. So you can just enter the OTP there. So see there, the process has been to enter your serial number, click on check eligibility, enter the OTP received on the admin ID, add-on will be added automatically, and add-on will be downloaded in the Tally folder. So that add-on would already be there in the folder in which you would have installed your Tally. Only thing is that you are supposed to update your license, post that only you would be in a position to use the same. So product walkthrough now we would do it further. So hope how to install that is clear. So what would be the name of add-on and all this thing? I would just do one thing. I would, if possible, even open that particular folder. Now see, this is the folder for TallyPrime Edit Log. Now, once you have installed the same, what would happen is in the app resources, if you look into plugins, then even look into this. That is financial statements NCE. Now see, these are the two TCP files that have been there, and there would be a one RAR file also. This particular RAR file you need to extract, and once you extract the same, you would get this particular Excel file, which is the Excel which is macro enabled, in which your financial statements would be prepared. And now see, if you don't know that where your Tally is installed or all those things, what you could do is you could just select your this TallyPrime edit log. You could just left click on the same, and once you left click on the same, open file location. So through that you could directly navigate to this particular folder. So you would be navigated in the TallyPrime edit log folder. There you could check in the app resources, plugins, financial statements for non-corporate entities, and this TCP has already been installed, and this is the RAR file. Once you extract the same, your macro enabled Excel would open. Hope till now it is clear to everyone. Okay, now moving forward. So let's say now, say this has also already been installed. Now, what are the mandatory things that has been there? So let's say if we initiate that, how and what are the basic requirements for the same? So that there should be this Excel 2016 and onwards. So this particular add-on or the Excel that would work is Excel 2016 or further. It should be above Windows 2016 also. So above Windows 2016. Now, what you need to make sure now, see, this is applicable from 1st of April 2024. So you need to make sure that you at least have your data for this particular date or prior to the same. So let's say ideally you need for first financial year, you need it for 2 years, for 23-24 and 24-25. So there is an option for books beginning from. So books beginning from, that should not be the date post that. So it could be either be for 24-25 or for 23-24. So that is required to be made sure. And further, you need to have at least the view rights in the balance sheet or the P&L. So what happens that, let's say when you open Tally. So let's open Tally once. So let's say I'm opening this particular company. So it is mandatory that you at least have the balance sheet and P&L the view rights for the same, because see, you would be able to export the same only when you go to the balance sheet and further the current period date. Now let's say for 24-25, if you want to export the same, make sure that the current period that is there is for 24-25. And if it is for, let's say, current year 25-26, then in that particular case, if you want to export for 24-25, then it won't be possible. So do make sure the same. Now, currently, when you open any of the balance sheets, this is the basic format that is available in Tally. Now, you are not supposed to do anything manually or anything. What you could do is you could directly export the same. Now, see, one thing is there's an option here for export. Now, when you have already added that plugin, there would be an option available here, financial statements for NCE. What you could do is you could click there. Now, see, there are various options which have been available here. That is the current year, previous year, current year end date. Now, see, this is also important that current year end date is set to 31st March 25. Now, when it is set to 31st March 25, you need to make sure that at least you would have opened the data for the 24-25 financial year. And you can even configure these all things. So export data for current year and previous year. Now see, the two basic things that would be there as of now is many of the clients or the LCC would have maintained the data in separate tally. So let's say for 24-25 it is in a separate tally, and for 23-24 it would be in a separate tally. They would have split the tally data. So in that particular case, Tally has even provided the option that you could just open both the companies, and the financials or the comparative or the XML would be generated for both the different data also, even if the same is not in a continuous data. Now see, what they have provided is export data for current year and previous year. Now how these options could be useful. So let's say if both the data are in the same company itself, so you could use this particular option itself, that for current year and previous year, the current year end date is 31st March 25. So 24-25 is the current year, and the previous period would be 23-24. So both the data would be exported directly. If you want to export it for one particular period only, you could select only current year or only previous year. So even that option is available. Now there is one more option. Is previous data is in a separate company? So let's say if there are two separate tally backups for the same. So now see, once you press the same, this particular company would list of companies would be loaded only in case the company is open. So let's say if you have opened both the companies, then only the same would be loaded here, else it won't be loaded. And they have provided this previous year end date. So what is the previous year end date? That would be by default, and you won't be in a position to manually change the same. Hope the same is clear. Now there's a question. In my case, it is showing that it requires TallyPrime release 6.0. Even my license is valid up to 30th April 2027. What to do? So see, maybe you won't have upgraded to 6.0. So it is mandatory that you have upgraded to TallyPrime 6.0 to use this particular add-on feature. So if the same is not upgraded, then you won't be in a position to use it. You can just, even your TSS is valid, then in that particular case, you can just upgrade your Tally and use this particular feature. In financial statement, accounting policies and notes to accounts are mandatory for non-corporate entities. So yes, notes to accounts are mandatory for non-corporate entities too. They have specifically provided in the guidance note. So till now, if just to brief that, the likewise the you are preparing for company, similarly you are even supposed to provide the description in this also. So let's say if there is any borrowing and there is a charge created against any specific asset or anything, or the personal property of the directors or anything, you even need to disclose the same. So there has been specific disclosure requirements also. Now there is one more question. If a sole proprietorship has two business and maintains the data in different tally, then how so company or anything, then this particular add-on feature doesn't work on the group company feature. Tally is working on the update for the same. apart from that, what you could do is there is even a feature for data synchronization in Tally. So what you could do is, so let's say there two companies are there, you could synchronize to one particular company as both needs to be merged for both the business, and that for that merged entity you could currently use with this particular add-on feature. So currently the workaround for the same is through synchronization. But if there are two separate datas, so for group companies and other thing, Tally is working on the thing, and they may come up with any update for them. So, and can I migrate the Tally data of 5.1 series to 6.0 and then extract financials? So yes, you could do the same. So you need to install a separate Tally. You need to update to 6.0, and post updation, you can just migrate the data and you could use this particular feature. There is even a question how to enable macros in Tally Sheet version 2019, because 2013 version is uh, because 2013 version it's working on proper, but 2019 version it's not working. So macros by default it is enabled. I didn't get it exactly. So why the macros is not enabled or anything? So let's say for just for purpose for any Excel or anything. See, initially if the same is not enabled, you would be getting a highlight pop up at the top of the screen itself. And apart from the same would have already been enabled, and it would be there in the options too for enablement of macros. So you could just check it from here itself also. Okay. Again, now which version of Excel is required? So 2016 and above. And in Tally, can I export the profit and loss and balance sheet in vertical format for tax audit clients? So see, this particular feature or the option that is that you directly cannot export it from Tally itself. What you could do is you could export the XML file from Tally, and that XML you could import in this Excel utility, and from that you could export the data. Okay, so now moving forward, hope all the queries are answered as of now. Moving forward, now let's say, so first thing that we do is, as I told, so this is the balance sheet and the P&L. So the thing that is mandatory is you need to have the at least the view rights for the balance sheet and P&L. Post that, you need to go to export financial statements for non-corporate entities, current year, previous year, that we already discussed that whether you want to export for current year or previous year or what. And this is the file in which you want the file path or the folder path where you want to export. Now let's say I'm giving some other path at present. So what I'm doing is, so in this particular folder itself, let's say I'm creating one folder. I'm providing this particular file path and I'm exporting the same here. So now see, as you could see that an XML file has been exported from Tally. Now what you need to do is, now see, once you have extracted this particular Excel utility, and say this particular Excel utility, when you this update to the add-on, it is by default there, and if not, you could even download it from the Tally portal also. So that option is available. By default, it would be there in the install folder also. So this is the Excel file that has been there. So let's say I've already opened it. I would just do one thing. I would try to clear data and other things. Okay, so I will clear the entire data. Now see, this is the basic balance sheet P&L Excel template that has been there. So as we discussed, what all details are available in this particular this XML file. So the current year trial balance, the previous year trial balance, these both details are already captured, and apart from the same, your trade receivable payable and your stock summary for the current year and previous year, both the financial year. So trade receivable and payable for bill wise detail, and stock summary for basically the production consumption data. So this is the basic Excel tool. Now what you are supposed to do. So now see, they have even provided with a readme whereby you could get all the details. So the release details. So from right from the first release 1.0 to 1.1, the help videos and other things, the FAQs, and your best practices to use this particular Excel sheet. So all the things have been clearly mentioned here also. If you go through the same, you would be able to use it seamlessly. Then there is an index tab for this notes and all those things. Now you can see there are hyperlinks for the same, which would navigate you directly to that particular sheet. The basic info. Now let's say the first thing you are supposed to do is the select file to import. So now as we know this particular file, now that we have exported, currently we did this 3rd September and 3:38. So this particular XML that has been exported that we are selecting. Now see data import in progress, data import successfully, header mapping in progress. Now see what all things, what pop-up is provided. Data imported and mapped successfully in Excel. Update the following sheets. The trial balance of current year, previous year, stock of current year, previous year, trade payables current year, previous year, and trade receivable for both the financial years. Okay. So now see what they have provided. This is the XML that has been there. The company name for current year, the company name for previous year, current year end date, previous year end date. So this is for 24-25 and this is for 23-24, the previous year. Name of the entity, ABC Enterprise, the address of the same, the PAN number. Now these all details are auto fetch from the configuration, the master configuration, the PAN and other things. So PAN, then what is the type of the entity? Now see, if you would have not entered the same in the tally, then what you could do is you could just directly update the same here also. So the type of the entity, that is partnership firm. See the three options that we already discussed, that currently it's there for individual HUF and partnership firms. And because it is a partnership firm, it has been selected in the tally itself. So from the same, it has auto fetch. Then what is this round off amounts? So see, this is one basic feature, that round off, if you want to have the conversion in hundreds, thousands, crores or what. So you could accordingly select the same. Then there is an option for trade receivables PP that we would discuss further, what basically it is. So trade receivable, that whether you want it as per bill wise as per tally, or you want the normal closing balance only as per trial balance. So they have provided the two options for the same. If you have properly maintained the bill wise detail in tally, then your aging and other things would happen by itself. So see, there are two options as per trial balance closing. In this case, aging won't happen by itself. You need to provide the same. And as per the trade receivable payable sheet, if you select the same, then in that particular case, what would happen? That based on your aging of tally, it would automatically do the aging in this Excel also. And property, plant and equipment and intangible asset block. Now see, again for intangible, it is possible. There are two methods of maintaining the block of asset. One would be the gross and the net basis. So gross basis is basically the gross value of asset less accumulated depreciation fund. So that comes to net block. Or some people would have even mentioned that directly net amount only in tally. So they don't maintain the depre fund separately. So in that particular case, in what manner you want to prepare your depre chart. So even that option is provided here, whether it is based on the gross block or the net block. So let's say if you are maintaining the depreciation fund, then you could use this particular option of gross block. However, if you are just providing the net figures in tally, then you could just select the net block. Apart from the same, for the purpose of printing in the financial statements, the signatory details, that is name of the entity, the designation, the place signing, name of the auditor's firm, the FRN number, firm registration, UDIN number, name of the auditor who is signing. So these all these details, once you fill up here, then automatically it would populate on the balance sheet or P&L or the financials that have been printed. So these are just the basic details. And one more thing to highlight, all the yellow mark details. So here what it shows that you need to fill up all these details. So name of entity signatory, let's say ABC, designation, we can say partner or anything. So these all these details that are there, now it is mandatory that all these details you need to either select anything, or you need to check, or you need to update. So and these white tabs that are there, so that those are something which are already auto-filled, and you are not supposed to change anything, but these are the mandatory fields which you need to update. Now, taking some of the questions. When I export current year XML, previous year not exporting. So in, because maybe you won't be having the continuous data, or you would have just selected the current year because of the same. You need to select both the option, the current year and the previous year. If you have selected the same, then the same also would be exported. So this was the basic info sheet. Once you fill up this particular sheet, the basic info would be updated in the financials that you are printing. Now coming to balance sheet and PM. Now see, as you can see that there has been some of the details already which has been there, the reserves and surplus or some other figures. And apart from that, there are the unmapped liability ledgers and the unmapped asset ledgers. So what basically happens? Let's say we are initially going to trial balance. Now we would look into the same, how to map each of the thing individually. Okay. Now, see, this is the basic thing that has been provided. How the trial balance is exported or the imported in this particular Excel utility, we would look into the same. So these are the ledger names, the parent group, the main group as per tally. Now see, this parent group and the main group that are there, these are the one that you would have named it, and it is there in the tally. Now here what it shows is that, let's say for any particular group, if you would have changed the name in the tally itself, then here it would provide that particular name that is available in the tally. And in tally group, it provides you with the default name that tally has provided. So let's say if user have changed any particular name or anything, they have even provided with one more tab where you could identify directly that it is which, from which basic grouping of the tally that tally is provided by default. So these are the tally groups. What is the nature of the group? Now they have even provided with the option for opening balance, debit, credit, and closing balance. Practically speaking, this opening balance and all those things are not required, but let's say even when we are auditing or doing anything, we generally use the same. So they have provided with this particular option too. What you are concerned with is the closing balance that has been provided here. So for the trial balance of the current year, these are the details of the closing balance. Now there has been an option for bifurcate balance. Now what basically is this bifurcate balance? So bifurcate balance is basically for some of the, let's say for borrowings. So the loans that are for term loans, let's say if you specifically consider, then how many term loans are there which are repayables well within a period of 12 months. And so that should be, I would say, grouped under the head of short term, and apart from that the other would be in the long term. So what are your current repayables for the term loans within 12 months, that would be under short term, other would be under long term. Similarly for trade receivable, which particular are exceeding 6 months and which are below 6 months. So for all the ledgers or the groupings which specifically requires the segregation, so that also they have bifurcated and provided here. So you can just update the same. So just say, let's say initially we are going to this. So loan for financial lease obligation secured. Now it is under secured loan. Now the current balance for the same is 57,000. Now see, one thing to note here is initially that, see, when you see it, there are two figures. One would be in the negative, the other would be in positive. So what negative figure represents and what positive figure represents. So positive are basically the credit balances, the positive figures, and the negative that are there, that are the debit balances. So this is just for the understanding of the terminology, that what are the positive and the negative figures. Now initially, now going to this, what is this bifurcate balance? So let's say there is a loan that has been there, loan from this uh, financial loan for financial lease obligation, or loan for a from NBFC. Now these are the balances: 57,000 credit balance, 20 lakhs balance. Now just for example, let's say out of this 57,000, your 7,000 is Now what initially what tally does is it provides all the balances in the current figures only. So and how much is non-current, you need to mention the same. So let's say in this it is 50,000 which is non-current. So what it happens, see, current figure is basically updated by itself. There has been a formula that has been provided. So the closing balance is 57 for the same. Now out of that 57, 50 is non-current and 7 is current. So it provides by itself the bifurcation for the same. The same has already been done by Tally. You just need to mention the figures here. Similarly, currently I'm just providing some of the figure on ad hoc basis. Now see, I just mentioned one more zero, so there is even a control check on the same. That figure cannot exceed the total amount that is there. So I can just mention the amount that is smaller than or equal to this particular balance. Okay, so these are just the basis on which you could just segregate the balances. Now coming further, classification 1, 2, 3, 4, 5. Now what is it? Now see, classification 1, that is basically whether the same is an item of the balance sheet or the profit and loss statement. So based on your grouping in Tally, it has by default segregated the same, that which all ledgers are there, which are the items of your balance sheet, and which all are there, which are the items of your profit and loss account. Now, moving further, the classification 2. So in classification 2, they have further segregated that if it is profit and loss account, then whether it is on expense side or it is on income side. And if it is in balance sheet, then whether it is on asset side or it is on the liability side. So that classification 2, based on your grouping in your Tally, that has been done by itself. So let's say if you see the balance sheet, it would either be the assets or it would be the liabilities. So these are the basic classifications that has been done by itself. Now moving forward, that is classification 3. Now see this classification that are there. Now this they have provided based on the guidance note that has been issued by ICAI. So what is it? The COGS owners capital account. Now these are the heads. If you even look into the drop down for the same, now see, in general, when you look into the liability side in balance sheet, these are the heads that has been provided. Owner's capital, reserves and surplus, borrowings, deferred tax, trade payables, provisions, other liabilities. So what all options would be there in the liability side that would be reflected in this particular tab by itself. So there is even a validation that has been provided here that no other additional options would be available. And they have even grouped the same directly from their end too. So this Tally has grouped the same by itself and provided here. So this classification 3 is basically the segregation, the grouping as per the guidance note that Tally has already mapped by itself. Now classification 4, that is the further subhead classification. So let's say just for example, this is the capital account. Abhinash capital, Kanshika and Abhinash current account and Kanshika current account. Now, so in this particular case in classification 4, what's the purpose for the same? You could just select whether it's a capital account or the current account. So see here the accounts would be reflected by itself. So I can just here select here that this is capital account 1. This is capital account 2. Now see what happens that this yellow highlighted, it shows that in all these fields I need to do some or the other grouping which is pending. So these are the ungrouped ledgers that has been provided here, that for this particular ledgers the grouping is pending. Once I do grouping, it turns to the normal white color. So it shows that grouping for all these ledger has already been done. Similarly, these two were current accounts. So what I could do is I could select here the current account 1 or the current account 2. Now there's a tab for reserves and surplus. So capital reserve. So now see it is under the tab of reserves and surplus. So reserves and surplus under what? So there is a capital reserve. Then there is this general reserve. Now see, I would just like to provide you a brief on the guidance note. What guidance note provides that? See all the basic details that has been available in the guidance note with regards to disclosure and all those things that are mandatory. Now, apart from that, let's say if the assessor feels that any particular disclosure is mandatory, even though it is not provided in the guidance note for the purpose of better understanding of users. So, in that particular case, what you could do is they have provided that you could even add the additional notes also for the same. So, in this reserves and surplus, so let's say currently the option for general reserve is not there, but you want to specify that in the reserves, this much amount that is there it is with regards to the general reserve. So what you could do is you could just select the tab here, that is other reserves. And now see, once you select the other reserves tab, the classification file is enabled. So if it is other reserves, then we need to specify the nature for the same, that which other reserve. So here we can select general reserve. Now see, so this is basically the relevance of each particular classification. These two classification 1 and 2, it happens by tally itself, whether it's an item of balance sheet or PNL, and if of balance sheet and PNL, whether of asset or liability or income and expenditure. Classification 3 is basically the grouping as per the guidance note provided by ICAI. So here also it does by itself that based on the liability, based on the ledger, whether it's a borrowing or a capital account or the other liabilities or provision or what exactly it is. That mapping to it does by itself. If you want to change the same, you even have an option to change the same. So you could just verify the same. Then the further classification for the same, that you could do it on your own. And if you are specifying anything in the other if you want to add any specific disclosures or anything, you could select this particular option for others and you could specify the nature in the classification file. So hope basically what is the relevance of each particular classification, that is clear to you. Now see, I'm just clicking on this particular option, that is save mapping, just to save the data, that what all mappings I would have done that have been saved. Now, see, initially the owner's capital and reserves and surplus, those were not reflected in the balance sheet because they were in group. Now I have already grouped the same, and you could even look into the same, that let's say if I'm just scrolling the same here, it provides with a hyperlink. So let's say if I click here, so what happens is that it goes to reserves and surplus. So in reserves and surplus also, it is whether a profit and loss account or the capital reserves. Then similarly, if you look into the same, if I go into for owner's capital, then this particular it's the note of owner's capital. So what they have done is for all the items of the balance sheet and PNL, once you click on the same, it directly navigates you to the hyperlink of that particular schedule or the notes. So through this, the navigation becomes really easy. Okay. So now see, one more thing that I want to discuss here is that even though I would have mentioned the general reserve here, it has not been reflected here in the balance sheet. When you click into the notes, it is not reflected here. So what's the basic reason for the same? Say I clicked here, there is one option here that update notes with classification 5. So I didn't click the same previously. So do you want to update all notes? So let's say currently I'm setting the same to yes. So now the notes have been updated. Now let's look into the balance sheet. Now see, if you look here, the general reserve tab is also displayed here in the notes to accounts. So it is mandatory that whenever you use the classification 5, then you click on this particular option, that is update notes with classification 5. Now see, what is the reason for the same? Till classification 4, these are the basic notes or the disclosure as per the guidance note itself. Classification 5 is something that you are adding it on your own. So whenever you do the same, they have provided with an option here that update the same. So accordingly, your notes and financials would be updated. Hope till now it is clear to everyone. And if there are any questions, you would just ask.
Actually, Kunalji,
Actually, Kunalji,
my voice is
my
getting.
voice is getting.
The questions are in the Q&A.
Okay.
मैंने actually so I've disabled the chat so that we can keep a track of all the queries and any feedback and stuff.
Okay. 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 Yeah. Sure. Yeah. Oh, so I would just take some of the questions. In the financial statements, accounting policies and notes are mandatory for non-corporate entities. Yes, so notes to accounts are also forming part of the financial statements. So it is mandatory. Where would you get this Excel sheet? So now see this particular Excel sheet, once you enable the Tally plugin, then in that particular case, you get it in the folder where the Tally is installed. Now, let's say if you are not able to locate the same, you could even find it from the Tally portal also directly. Before export to MS Excel balance sheet, can we delete the unnecessary lines? Is it possible or not? So now see, they have already provided with an option that let's say if there are any zero balances in the item, we would look into the same also. So let's say if in balance sheet in both current year and previous year, there are any zero balances, then in that particular case, it would delete the same by itself. So all the ledgers or the groupings with the zero balances that won't be reflected. So that option is already there as of now. And if the ledger balance is debit or credit same in one ledger, we would even look into the same. So let's say generally this happens in case of your debtors and creditors. So for your debtors, there might be a scenario that from some debtors an advance has been received, so they would have credit balance. Now this particular thing you are basically supposed to show it under the advance from customers or under the tab of other current liabilities. So that segregation also it does by itself. We are not supposed to do anything manually. So if possible, I would just try to navigate the same there. So let's say these are the trade payables and trade receivable. Now see, I would just take this particular topic as the question has been highlighted. So now if we look into this thing that is trade payables or the sundry amount of trade receivables. Look here. Now see, there are this ledgers, how the same has been named. SD means sundry debtors and SC means sundry creditors. Now, all the debtors, so which has debit balance, that has already been reflected here. But there are certain creditors also to whom we would have paid advances. Then in that particular case, those creditors which are there, that are also reflected in this particular tab. Now, see here, there is an option for the classification of the same. So what exactly is this? So unsecured considered good, doubtful, so these are basically for trade receivable, and this trade receivables, if it is there, then it is unsecured considered good or it is secured or what. Now the same thing if we discuss for this, in the trade receivable tab itself there is debit balance of sundry creditors also. So sundry creditor, that is Raj Enterprise. So what you could do is you could just select the tab here, that is loans and advances. Now loans and advances, now again it shows unmapped. So it is current advance to suppliers or it is non-current advance to supplier. So you could select the tab here, that is current advance to supplier. So now see, if there are multiple ledger balance, so generally it happens in case of debtors and creditors mostly, that to some you would have provided with the advance and other things. So if you are using this bill by bill feature in Tally, then it would be auto populated. Now apart from that, same the second option that is there here, that there is a tab for less than 6 and more than 6 months. Apart from that, there is on account considered as less than 6 months. So let's say in Tally, if you would have entered certain details which is currently under the tab of on account, so you have not provided a bill reference or advance or anything, then in that particular case those would be reflected here. Now what you could do is there are two options. You either rectify the same in the Tally itself and post that you import the updated XML file, and the second option is that you could just directly update the same here and post that in the Tally also you pass the rectification entries. So let's say it is 60,000. You could just provide the segregation of the same, that whether the same is under more than 6 months or less than 6 months or anything. So 60,000, let's say it is for less than 6 months only. This 175 to, you could just mention the same here. And for trade receivable, whether the unsecured considered good or what exactly, you could select it from here. So hope that was a question, that what in case there are multiple ledgers. So now see, for using this particular feature also, that is trade payables or trade receivable current year, it is mandatory that we initially discussed in the basic sheet itself. that the trade receivable and payables, whether you want to take it as per the closing balance of the trial balance or as per the trade receivable and the payable sheet. Now, see, if you have selected this particular option, then accordingly, based on the aging of that sheet, it won't be updated. So it is mandatory that you select this as per the trade receivable and the trade payable sheet. So accordingly, whatever grouping would be there, based on that particular manner, it would be reflected here. So hope that is clear. Okay. Then moving further to questions. Before moving to Excel, can we delete unnecessary lines? So see, zero balance would be removed by itself. So that option is already, functionality is already available. And one more thing was that if the ledger balance is debit or credit, same in one ledger. So in one ledger, there could never be debit or credit. So let's say if bill wise you would have properly maintained the same, then accordingly the same could be reflected in the trade receivable and the payable report that we have already discussed. Do we have do we have this every time we download new data after changes? So see what happens is, let's say once you have done the entire grouping, post that at the time of audit or prior to that, let's say at the time of finalization. So finalization, the management took a call that we need to have certain changes or this certain year-end closure entries for provisions and other things. So in that particular entry case, there may happen that you would have grouped the data, certain provisions and other entries have been made by the management. So what you could do is, once the same is finalized, you could just update the XML file. So once you select the further XML, the new XML file, if you import the same, what would happen is, see, there is an option here for save mapping. So now once you have saved the mapping for this particular company, whatever mapping you would have done, that has been saved. Now, if you again import the updated XML file to all the ledgers in the tally that has been grouped previously, it would remain intact. Only the new ledgers that would come. So for that, if the grouping was not there, or if a new ledger is created, then only you are again supposed to map. Else, all the mapping that were done previously, that would remain intact as it is. So you are not supposed to do the mapping again. But one particular thing that here we looked into, that there is an option for bifurcate balances. Now this you would be again to do it, because see, this balances and all these things, this tally doesn't know grouping. Whatever you would have done previously, that would remain intact, but for bifurcate balances you need to do it again. So even if importing the same again, then it is not required that you are supposed to do the entire mapping right from zero. Then there is one more question, that in the vertical format of the financial statement, should I include both the current year and previous year figures? So yes, so both the figures you need to report it unless there is a new company. For capital, if we have already transferred PNL into the capital, then how can we classify it into notes? So see, in the notes, if you look into for capital, it's basically the addition or the deletion. The PNL, if you look into the profit at the end, it goes to the capital account only. So it would be included in your capital balance, and the profit figure that would be there, that would be reflected in the PNL statement as the net profit. So other than that, in the balance sheet, the profit and loss reserves or those things are not required to be reported separately. But if the same is not transferred in your tally also, then it would show separately as P&L reserve. But whatever transfer entry you would have done in the tally, accordingly, it would be reflected in this particular Excel itself. So this is the replica of the tally itself. So once your tally is finalized, based on the same only, these financial statements are prepared. Else this is taking P&L balance in reserves. So because see, you have not transferred the same in tally, so it would take in reserves and surplus only. If you had already transferred the same in the capital account, then it wouldn't reflect in the reserves and surplus. Are NCE financials mandatory even for the non-audit cases? Attestation for non-audit for the non-audit case. So see, currently basically it's for signing. So there you could say it that it's recommendatory rather. For audit cases, it is mandatory because there the signing goes. Trade receivables having the credit balance, will it get auto mapped in the balance sheet? So yes, we already discussed the same, that it currently the trade receivable that is having the credit balance that is reflected in the trade payables, and in that you could just show it as the advance received from the customer. So let's say we look into this trade receivable sheet. We just discussed that current advance to suppliers. Similarly, if we look into the same, that is with regards to the trade payables. Now see here there is sundry debtors also in the trade payables sheet. So there would be an option here, other liabilities, and see now it is automatically reflected here, advance from customers. And this trade payables, the MSME and the non-MSME also, see based on the segregation in the tally, it is auto-populated by itself. And if you want to update the same, you could update here. So if you had already selected whether it is an MSME or non-MSME in tally, then in this particular sheet also it would come by itself. So it is just that how well your tally is maintained. If it is really good, then based on the same, all the figures or the financials would be ready by itself. Details of aging debtors, yes, it is exported. So aging of debtors and creditors, that also is exported by itself. Now see, one thing I would just like to highlight here, because this point is raised, that there is an option in tally with regards to accounts only and inventory. So many of you might already be aware of the fact there is an option here, maintain accounts, and there is an option here, maintain inventory. Now below that, if you look into integrate accounts with inventory. Now what is the relevance of this particular thing? Now see, if you want to integrate the accounts with your inventory, what happens? Your existing stock summary in tally, that is reflected in your balance sheet and P&L. However, if the integrate accounting with inventory is set to no, then in that particular case, what happens? The stock in hand ledger is created and you can just manually update the stock figures there. So if you don't want the inventory details in your financial statements, or you don't maintain the same in tally or anything, what you could do is integrate accounts and inventory. You could set the same here to no. Accordingly, only the stock in hand ledgers that are there, that would be imported through that particular XML file in the Excel utility. And if you want the stock data also, then you could set that option to yes, integrate accounting accounts and inventory. So now say if you look into the same, the stock of the current year and previous year, even those balances are updated here, that what is the opening balance, what's the closing balance, or what's the nature of the same. So just for example, let's say for current year, this is stock in trade. Now this is finished good, so you could just select the same, that this is for finished good. Then again, this is for FG only. These are some loose materials. You can just say it is for stores or packing material or loose other materials. Then this is raw material. So accordingly, based on your inventory working, it would be mapped by itself. So let's say currently I'm just doing it for all the items. This is stock in trade and this is work in process. And accordingly I can do it for previous year. Now see, there is an even option for copy mapping from current year in the previous year tab, and in the current year tab it is an option for copy mapping from previous year. So what happens that, see, once you have mapped your all the financial details for the current year, if you want to map the same accordingly for the same ledgers in the previous year also, you are not supposed to do it manually again. You can just select this particular tab and all the mapping for the previous year would be done by itself. So that again is one of the really good feature that has been provided. So details of aging of debtors, creditors that we discussed. What about the depreciation till 31st March 23? It was as per income tax rate. Now we need to do as per AS 10. How to incorporate that? Now see, basically, see, first thing to highlight. Now when you look into the company, what companies have provided, in company's case, it is specifically schedule 2, which is provided for depreciation. And in that you need to charge based on the useful life. When you look into the sole proprietorship or the partnership firms or the HUF, generally what they do is they do it as per the income tax rates itself. in the books of accounts too, so that there are more disallowances and allowances, the difference due to the depreciation. If someone is following any other method also, because see, nowhere it is prescribed that individual need to do it as per useful life or this or that. They can take the rate, be it be as per the income tax or as any other rate which it seems feasible to them. So whatever depre you would have charged, you could just provide for the same and mention the rate in the books of accounts. So just to even brief you with regards to the same. So we would even look into the sheet for the this, I would say, the PP sheet that is there. Now, see, if you look into the same, there are two things. One is this for gross basis. So if you have mentioned the depre fund and other things, then you could maintain this particular sheet. Now the other one that is there. Now this is for the property, plant and equipment asset. Now see, currently it is blank. Let us do one thing. Let us do the mapping for the same first. So let's do one thing. I would just do one thing. I would just do the entire mapping for the same so that it gets a bit clear to everyone. See, we can hide and unhide the same also. I'm just even mentioning the balances for the same. Now see here, there is one option. This is P&L balance, that is primary. Now this profit and loss account that is there, where it needs to be disclosed. So you can even select the same, that whether it's under reserves or any other thing. Now this, when you discuss, that is furniture and fixtures and land. Now furniture and fixture at 10% and land. So let us do the grouping for the same. So initial furniture and fixture. So whether, now see, previously we have selected that on there on net basis. So we can select net furniture and fixture. Now if you would have selected the gross basis, then the options for the gross would be available here. Now furniture and fixture, and there was even a freehold land. So we have selected these two particular options as of now here. Okay. Now moving to balance sheet. So now see, the property, plant and equipment, this amount has been reflected. Now, because we selected the same there, what happens? The freehold land, we have selected on net basis. So now see, this particular tab is enabled. We currently have not done on gross basis. If we would have done on gross basis, then notes to balance sheet on gross would have been enabled. So 14 lakhs is the opening balance, 14 is the closing balance, because land is not non-depreciable asset. Similarly, furnitures and fixtures. So 275 is the opening balance, 23,000 is the depreciation. Let's say be you have provided on useful life or as per any specific rate or anything, and accordingly there is a closing balance. They have provided the columns for the addition or deletion. Now let's say this is the total depreciation that's been now fetched and provided here. Now let's say there has been some sort of deletion out of this. So let's say they have sold a part of the furniture, let's say amounting to rupees just say 13,000 or something, or 10,000. So what happens is, accordingly it would update the depreciation by itself. That 10,000 was the value of the asset that has been sold. Similarly, if there has been some addition, even that could be provided here. So this is basically, see, the closing balance and all those things would always match. And apart from that, let's say if you have any specific rate for the same, then even that could be defined here. So let's say in this particular case it is, let's say, 21% or something, then you could just mention the same here, that this is the rate of 21%. So that would be reflected in your notes to accounts also. So through this, your basis for this balance sheet, that is on fixed assets on gross basis or not net basis, even that would be reflected here. So currently, let's say we are just mentioning the same like this. So 275 and 23 is depreciation, approximately 9%. So hope that is clear. Then depreciation we already discussed. How to paste mapping from one firm to another firm. Now see, from one year to another year that is possible, but from one firm to another firm that is not possible, because see, ledgers and all those things would be already separate. So it is always from one firm to another, and if there are two separate data also, then you could just select that particular option, that copy from previous year. It is not taking capital addition through mapping. So see, when discussing about the capital account and all those things, so now see, this is the total balance. If let's say that has been there in this, the total capital account and the current account for the year ended 31st March, and whatever additions and all those things are there, that you could mention the same here, because what happens is the total inward and outward that would be there, accordingly it would have calculated. So let's say if we are coming here, so these are the closing balance figures that has been there, the 40 lakhs and the 6 lakhs. So based on the balances, it would populate the same by itself in this particular notes to accounts also. And any segregation further, if you want to do that out of this much was remuneration or interest or anything, then that you could mention the same here from your end. Now, provisional financials with UDIN should be prepared in vertical format. So I would say yes, because see, if anything that has been there with UDIN, you need to have it in this particular format itself. And even currently, it is provided that you cannot directly certify the provisional financials. Rather, you could issue a certificate which provides that the provisional financials or the unaudited financials are attached. That is a sort of review engagement. Is it taking opening capital and closing bifurcation by opening is not updating there? If we are entering the same manually, it is showing difference. So that won't show difference. Accordingly, opening and closing would be the same. The point is that you need to see opening and closing are again based on the actual figures of opening and closing balance, and whatever addition deletions are there in actual basis, if you put up the same, then it won't be any difference. Uh, can you show one example for capital? Yes, I would take the same. Why mapping is required on current year trial balance and also in the previous year? Is there an option to, yes, so both could be mapped, we already discussed. Can we get printable annexure list like secured loan? So yes, we can get the annexures also. What is for LLP? What rate they need to take? So see, LLP also currently, LLP Act doesn't specify that you need to have it on useful life or anything. DAPRI, you could take it as per the best possible estimate. You could even take it as per income tax or the best, the useful life estimates that's been there, because the LLP Act doesn't define the same that you need to have DAPRI in this manner only. Only for companies it is defined. How to paste mapping on one firm to another, from one company to another, current year and previous year it is possible, but not apart from that. Means for two separate companies itself, let's say if there are two different companies only, but for same company, if it is current year and previous year, you could map it from current year or previous year or vice versa. Can we get printable and Excel list? So yes, we can get it. This Excel sheet, where can we get? Can you please repeat? So it would be available on the Tally portal. We would share you with the link also. And apart from the same, where in the folder in which you would have already installed your Tally, in that particular folder it would be stored. So let's say my tally is in this particular folder. So here there is a WinRAR file. You can just extract the same, and in this particular folder that Excel file would be there. Okay. So now even coming to other points. So let's say let us just quickly do the grouping and the other things. Questions, I suppose mostly I had taken each of the same. I would just hide some of the fields for just properly doing the grouping of the same. So let's say this is secure term loans from bank. I'm just grouping the same. Loans from secure term loans others. related party loans, unsecured loans from others. So see, accordingly, you could do the grouping for the same. Salary. Now see, unsecured loans from banks. Now it is under the unsecured loan that has by default been provided under the tab of the borrowings. So it would basically be something that is the short-term borrowing. That option is there in the uh, format that is for short-term borrowings. Now let's say if I want to change the same and I want to have it under other current liabilities or anything, I could even change the same. And here I could just mention that other current liabilities is with regards to what or other payables. I can just mention anything here that is other short-term borrowings. Similarly, there is salary payable. So you could just select the same here. The GST ledgers. And see, there is a option for filter and other things also. So you could just filter and do grouping for multiple and these ledgers in a single tab also. Similarly, there is this provision. So provision for gratuity, then accordingly provision for leave encashment. Then these are the sundry creditors or the trade payables. So now see here, you can select the same whether you want it from trial balance or you want it from that particular Excel sheet containing the report. So you could just select the same. Investments, quoted investment or shares or anything. I'm just currently just selecting the any of the same just to have an idea of the same. Prepaid expenses, security deposits, and provision for doubtful debts. So see more or less this classification for as that has already been happened. Now say in case now this is advanced tax. So in that particular case also if you want to select specifically for the same. So there are options for the same. If you could just select your other assets, and then you could other assets and specify the nature for the same, and you could even provide that is for advanced tax or any other thing. Now, similarly, there is this provision for income tax. Now, see, apart from the same, if you look into here, that if let's say if any of the balances that are there that are mapped incorrectly in this particular sheet itself, the assets or the liabilities itself, then that also you could update it from your end here. So if there is something which is in asset or which has been grouped in the liability, even that is possible that you could do it from your end directly. So see, once you do the same, what you can do is you can just click on here. Initially, just do one thing that is save mapping so that whatever mapping you would have done, that would be saved. And apart from the same, now see if you look into the, let's say currently we are looking at just the liability side in the balance sheet. Now see the unmapped liability ledger in the current year, it is showing zero because we have mapped most all of the same. However, it is showing the same in the previous year because for previous year yet we have to map many of the things. So what you could do is one thing is that you could just copy mapping from the current year. You could do the same and accordingly this figures would be mapped by itself. So that is one of the option that is available. So once you do the same, there has been two options that is provided: print all notes So let's say I'm doing the same. How the format would be, it is just for the understanding of the same. It would take a bit of time. And by the time, let us take some questions by the time it opens. So how paste mapping from one form to another, that all we have discussed. How to get printable annexure list, that's been discussed. Is there option to remove notes nil balances? So that also has been discussed that the zero balances would be removed by itself. And it is mandatory to report notes with nil balances. So see, as per guidance note, if you see, look into the same, they have specifically provided that if there are any such notes where it is zero balance and it is not relevant for the user, then in that particular case, the same could be removed. So the format in the guidance note is not in a specific manner that no, if it is mentioned in the same guidance note, all the formats should be there by itself and you need to report the same. Now, see, this is just for understanding that a brief about entities and significant accounting policies and balance capital balances, notes to accounts. So all these things that are there, so that would be printed in a vertical format properly. So these are the all the notes to accounts. So these are available in a single click with all the annexures and everything. So that's basically how it works. Now you have selected print all notes. So everything is printed. Now there is one option that is print the current sheet. So if I print the same, what would happen? Only this particular balance sheet that's been there, that would be printed. So there are two options. If you want to print all the notes, print only balance sheet or print only PM, then accordingly those options are available. Now this is the print only balance sheet. Now see, the current year is entirely mapped because the grouping is not done. This shows the unmapped liability ledger. There are certain unmapped assets also which are yet to be mapped. So it shows here. And these are the unmapped assets of the previous year. The details of the chartered accountants and the partners or director I am yet to mention. This just mentioned the ABC partner, so it is reflected. So accordingly, in a proper A4 size format, it would be reflected by itself. So you're not supposed to do even the formatting of the same. Now there is one more option that is with regards to export to MS Excel. So what happens that, let's say if you want to just export the same in the MS Excel file, then in that particular case it can even be exported. However, the links and the formulas that would be there, that won't be available in that particular Excel sheet. So I suppose this is the particular Excel file that's been there. So now see, if we look into the same. Just give me a minute. So this is the print file that has been there. Now in this, there won't be any sort of formulas or anything. It would be something that is directly available from the system. So from where the figure has been derived and how, that won't be there. However, the same in the notes, that would be there through the link of each of the same. In this, the Excel formulas and other things would have already been removed. Directly the figures would be there. So this you could even export in the Excel sheet and you could format the same further as per your requirement. And just one more thing, see here only the one which has balances that has been displayed. So the one with zero balances, see here it is currently not mapped in previous year, so still it is there. But all the groupings that were there, where there were no balances, that has already been removed by the system. And even the numbering of the notes has been done accordingly. So numbering of the notes are also rectified accordingly, means updated accordingly. And even the one with none of the balance, that has been removed. So that is taken care by the tool itself. They have defined the same in such a beautiful manner. Sir, the mapping, do we need to give complete list of debtors and creditors? So see, basically for this sheet, it is not mandatory as per the guidance note, but sometimes banks and other authorities, they do require the same. So if you want the same, then that option is available. You could have it from system, but practically as per guidance note, the list of debtors and creditors are not required. But here it is just for the purpose of mapping or and the aging of the same. So Tally, it is not something that it would print in this debtors and creditors in notes to accounts, but it is just for the purpose of mapping, so that you are not supposed to do it manually. And the mapping initials are fixed, or it is done again and again, we upload next time. So see, no, the mapping initials, once you save the same, it is fixed. So even if you provide an updated XML file, you import an updated XML file, then in that particular case too, your mapping will be intact. Only the amount of the ledgers that has been there, the amount bifurcation of the amounts, that you need to do it further manually, else it would be uh, mapped by itself. Okay, so this was there, and I suppose there was one just question. I think mostly I've answered. Just one question that needs to be considered with regards to share capital. I suppose someone asked, so I can just take it up. So now see, in this particular case, in share capital, if you look into the same, there's an opening balance of 40 lakh. Closing is again one and the same. The transaction debit and credit that are there, that are currently zero. The closing balance in both the cases is one and the same. And when you look into the notes for the same, then here in notes also, the opening balance is there and closing is there. Now, addition or deletion, if any there, you need to manually bifurcate the same here. Now, because it is not even there in the trial balance, it's not going to be reflected. It would show as difference. What's the basic logic or the reason for the same? It is not at all there in this particular sheet of debit also. So if it would have been there, you could just do one thing. You could just segregate the same. And now, so let's say remuneration is 40,000, 20,000 for the year, 20 lakhs. Withdrawal also is 20 lakh. Now, see, in that particular case, the difference is zero. So if there are any such things, you can just mention the same manually here, and accordingly it would be printed. So I suppose there was a question that the share capital, it shows difference. It would have only been because of the reason that you would have not mapped it correctly or mentioned the actual amount of the inward and outward, because the opening and closing are as per the trial balance only. So that could not change. Addition, deletion, whatever difference is that, that would be based on the differential amount of the opening and the closing balance. Uh, so most of the things I've just tried to answer, and mostly I suppose that all the things have been answered. Any further questions or anything you could just please ask?
There's a chat. Can you please explain how to remove zero amount in notes? I think.
Just one. So say let's take an example. So now say in this particular balance sheet itself. So let's say now these all ledgers that are there. Now these are with the zero balance. There has been no amounts in the notes also for the same. Now what happens that when you are actually printing the same, so let's say print the current sheet, what happens is Tally by itself removes all these sheets. And see the numbering are 3, 4, 9, 10, 11, 12. So when we printed, it is 3, 4, 5, 6, 7, 8. The numbering 2 would be updated by itself. And the zero balance that are there, that would be removed. The zero balance figures only would be available in case there are balances in the current year. However, in the previous year, it is not there. So that is mandatory for comparative purpose. But if in case it is nil for both the financial year, then that is not to be reported. And in guidance note, in the a guidance note, it is specifically provided that if both the year figures are zero, then it is irrelevant for the user. So users can remove the same. It is not mandatory that this format is there, so you need to print the same. If there are zero figures, then the same needs to be removed. And what happens is what Tally does is that accordingly it would even renumber the transactions. So even that is done by itself.
Great.
So
Yeah.
is it
Actually, there's one more raised hands named Eshaki Raj. Do you have a question? You've raised hands. Can you unmute yourself and ask the query? Hello? Yeah, you're unmuted, but we can't hear you. Well, okay. So I think we can conclude this session. We have actually overboard by 10 minutes. So Kunalji, really very smoothly done and so many questions answered. In fact, you took the Q&A side.
Correct this demi cars.
That
For
helped.
them also it is not correct. For us also it is not correct.
Yeah. Do you have a question, Shaki Raj?
Yes, I have, but
Yes,
this
sir.
Excel problem macros. First, do the 2 3 financial, it's working. So now it's not working. There
Shall I send you, ma'am?
means,
means
sir,
if I'm clicking to export to MS Excel or anything, import that XML file. It's showing on disable macros.
no, so the in that particular case, the macro has been would have been disabled in your Excel. So you can just enable the same and you can use the same.
Yes, I do that in settings wise. I have to go options and then press enter. I enable that,
Yes,
but it's not
yes.
working.
It is correct. 5,37,000.
So, sir, in that particular case, if it's okay, we can just check the same in your system post session.
Yes,
Because
same.
see, if macro is enabled, then it should work basically. Because it has nothing to do with Tally or this
So you
particular thing.
have
It is
quarters,
the basic functionality of the Excel.
then you have total. Again,
Sorry.
So,
if you see amount
sir,
in
macros is the basic functionality of the Excel.
this
If
is
the
correct.
same has been
Outcome.
enabled, let's
Amount,
say going to the
amount of
options tab, then in
70.
that particular case, it should
Yeah, same
work.
thing. It's showing in my
So they
Excel
created
also.
75,600, but they
So, sir,
showed part
here
A
If I
itself, if
click
it
on
is
press
working,
to
660,
center settings,
550, sorry.
yes,
So
then
automatically it will result
macro
into
settings,
demand
I go and then
yes.
in the consonants
uh,
form called TDS
enable
as
VBA macros.
payable
That last one I click that.
to the extent
But
of
this option it's not showing.
72,950 rupees.
This
Sir,
enable Excel
Actually,
4.0
this might be an
macros.
Excel issue. That's what I had
yes.
said. Ki you have to connect with an Excel expert
Okay,
because we've not encountered this issue. Uh,
okay,
yeah,
Page 3,
that will
okay.
help, sir. Yeah.
Thank
page
you.
3,
Mr. Jayant, you have a question?
net tax payable, meaning that as per their calculation,
Mr. Jayant? Okay, I think we are over time. So, with too many raised hands, Kunalji, if is it okay if we take one or two more questions?
Yes, yes, sure, sure.
I'm just only insisting because this is audit related, audit
No,
period
no, sure, sure.
important. So, thanks. Mr. Pankaj, do you have a question?
Yes, I just wanted to know when I remove the nil balances, you're getting the print version. Is it possible to get a Excel version of the same print balance? Because I would need it for future references also.
So, sir, basically, see, means when you export the same to the Excel, so in Excel, all the details would be available, but the point would be that there won't be any formula or anything in this when you are exporting to Excel. So balances and all those things, if you look into the same, this would be available in the Excel also if you have exported the same. But formulas or all those things won't be available. So if it is just that you want to just there's a final data of tally which has been grouped and mapped, and post that you have locked the tally data, the Excel file also if you are locking the same, and accordingly based on the same you have exported this particular Excel sheet. If you want to do some formatting or some other things or add certain things, then you could do it in that manner too.
Right, thank you, sir. But my limited question was when I the Excel, it shows like in your the screen which you're showing 5, 6, 7, 8 are nil. But when I print it, it shows the it doesn't show these numbers. But can I have a Excel version of that which I'm printing in a PDF? Is my question.
So let's say if we are exporting this to Excel,
Yes, it's come 5, 6, 7, 8 comes as nil, which is not the case in my when I do it print it finally.
Okay, so you just want that in this particular Excel too, it should be that this balance sheet should have been removed.
Correct, because I would use it for the future references also, like many places where it will be submitted, and I would want to refer in Excels again and again.
Yeah. Kunal, Darshan here. Can I take this?
Yes, yes.
Yeah, thanks. So, it's a good suggestion. Many have suggested that. So, we are coming up with 1.2 release. So there would be one smart export to MS Excel, wherein like whatever is we are printing, that will be exported in the Excel. But it would be a dumb Excel. It will not be having formulas carry forwarded. But yes, this blank ones will be removed and the renumbering of the notes will be taken care of over there.
Thank you so much. I got it.
Okay, so anything further?
Komal, on
Okay,
to
so
you.
yeah, so just to sum up the thing that now see this is one of the really good feature that's been there. So point is that see the data, most of the SMEs, if you consider, then it is basically for micros, small and medium enterprise, and the large entities, so MSMEs. So for each of the same to large, all the accounting standards are applicable. To micro, small, medium, some exemptions are there. Now most of them are using Tally. Most of the MSMEs are using Tally. Now being an auditor, let's say if you're auditing the financials of those entities, so you would even suggest your clients that you can use this particular tool. See, there is no additional efforts or something that has been required except the one-time mapping. So while your clients are providing the financials for the purpose of audit, they could just group and map the same in the Excel template, which could be directly used by you for doing the audit, whether the same is as per the guidance note or not. And the template is designed in such a beautiful manner that all the fields that have been there on all the mandatory requirements of the guidance note are addressed in this particular template. So rather than preparing these particular financials in Excel manually and doing all those things, it is better to use this thing. And thing is that it would be fully compliant with the requirement of the guidance note of the ICAI. And even you would be assured, being an auditor, that no things are not missed, or the balances that are there that are not, I would say, uh, changed from the financials or something else. So the financial statements would be foolproof, fully compliant, and it's a really great development that has been done by Team Tally, and really useful specifically to all the auditors.
Thank you so much, Kunalji. So, as you can see, so many reactions for you, and also we received a lot of useful, lot of people call it as a very insightful session and very useful feature. So, I'm hoping that this session does that to you, that you can start adopting this release and recommend as Kunalji himself has used it. So, thank you, Kunalji, for actually giving more of your time than we had asked for. And thank you for the audience who are still here. That's great. Kunalji, there's somebody who's asking for your number. If you can. So, for the recording, I've shared that in every session is updated in our YouTube channel at Tally CA Connect playlist. I will share that link once again. And Kunalji, if you want to share your email ID, if that can help.
Yeah, sure. I would just share the thing.
Yeah. I'll just send the YouTube link one more time. I'll try that this recording gets uploaded in a day. Thank you, Kunalji. So, Mr. Jayant, you can write to Mr. Kunal. That will help. And I have shared the playlist for the CA Connect, so that will upload the session there. So, thank you so much, everyone. I'll now end the session. Thank you.